Good evening, everyone, and welcome to NGEN Markets Training session. And I hope I'm audible to everyone. It seems like few participants are still joining, and we could wait for a moment. But until then, we are gonna discuss the topics we are gonna have for today. So the topic we are gonna have is client onboarding and client retention using portfolio analytics. So this is the main topic because why how portfolio analytics at Engine Research is gonna help you in client onboarding and the client retention. And here we are also gonna have Q&A session. So any questions, any feedbacks you have regarding the platform, you are free to address them either on chat or either verbally, and we will be answering them all of them. So I hope I am audible to everyone and my screen is visible to everyone. So if it is not, please let me know via chat so I can, make the amendments, skillfully. So let's start with the session. Let me just, remove this screen up and I will just open my NGEN Markets portal. So I hope the NGEN Markets portal is actually visible to every one of you. So do let me know if it is not. And here we are going to talk about how we are going to onboard model portfolios. So model portfolios and even the clients. So we are going to talk about the clients first, the clients which are our prospective clients. So how to onboard them. So the best way to onboard them is just to click on this plus button. And all you have to do here is you have to click on this add a new portfolio and this dialog box appears. So once this dialog box appears, all you have to do here is we have given two sets of options. One is manual uploading options, or other is for a prospective client, all you can do here is you can either upload a CDSL CAS PDF, an SDL CAS PDF, and CAM summary report. So if you click on, let's say, CAM summary CAS PDF, all you have to do is you have to click on this file password and upload it. So once you upload it, something like this will appear. So this is one of the upload option, ISIN from Excel. If you click on it, you can either add an ISIN with units example or percentage example or amount example, and similarly your portfolio gets onboarded. And not only just mutual funds, if you do via ISIN, you can even capture stocks. So as an example, for capturing stocks, all you have to do here is you can see here the percentage example. This particular stocks are also onboarded. So similarly, this new portfolio is onboarded here. I'm just going to onboard it again to show you. So this is the new portfolio which we have onboarded, and what we can do here is we can write the portfolio name. So let's say a client number 1. So this is our new client which we are trying to access the information of. So once you see that, you can run the portfolio very easily. And running the portfolio is fairly simple. All you have to do is run the portfolio, and here you can see here we have given 2-3 things. One is that once we run the portfolio and you don't want to show this entire list to your clients, all you have to do here is you have to click on this button. So now we are just gonna see this new portfolio altogether, and we are just going to review this portfolio. So this is our new portfolio of our client, and we are going to review it according to the asset allocation, performances, and some different sets of parameters. Because once we onboard the clients, it is very important how we are going to access those clients portfolios information. And every single portfolio has its own sets of feedback as a negative or a positive. So we should find those loopholes and convey to the client that what are the intricacies in the portfolio and how we can help them. So first thing we are going to do is we are going to see how asset allocation is affecting this entire portfolio. So as you can see in this particular portfolio, we have some sets of funds which are which this client has taken position in, and you can also see the entire asset allocation. So now why asset allocation is very important. Let's say a client has taken position in some stock, let's say Sun Pharma Industries. Let's edit it. Let's add in a stock Sun Pharma Industries. Now we need to know that, let me just make it in a rescale to 100 and run it. So once I run it, you can see this is the new portfolio with the particular stock as well. So we have also added the stock altogether. Let me just add, yeah. So we have added the Sun Pharma Industries, and here, as you can see, Sun Pharma Industries is allocated as 11.93. Now, the importance of this is when you click on this I button, you can see the exposures which are coming from direct holding and which are also coming from a mutual fund. Now, when you actually analyze a certain portfolio of a client, this is very important that where these exposures are coming from and how you're going to help the client to equally allocate or to make a proper asset allocation for their particular portfolio. So that is how this asset allocation works out. And one more important thing is that how concentrated is this portfolio. So when we are assessing the portfolio, the assessment will be that are we truly very concentrated? Are my top 3 holdings or top 5 holdings, highly concentrated or not? Let's say my holdings are concentrated like 45%. Now that is truly huge. The only 3 holdings are actually having a 45% exposure. That's going to be a risk for me, because if those 3 holdings underperforms, my portfolio might also underperform altogether. So that is the reason the concentration should be, in a very particular format, so that you can choose a concentration what you want to have, and you can see, how the client's concentration are as of the current day. And one important thing is you can also see that how highly the client is inclined towards a particular AMCs. You might have some clients who might have made investment in Axis or Nippon India, like 4 or 5 funds taken into the portfolio. So you might want to see that, okay, 45% of their entire portfolio is underlying with Nippon India. So is it appropriate or not? That is your call as an advisor. But all you can do here is you can click on it and you can see that these are the 3 funds which the client has taken position in. And that is very, very important, because whenever you're trying to plan and give a holistic approach for a portfolio, this is how you can see that, a new portfolio which you have onboarded, this is how the asset allocation you can do for your clients. And then we have given certain more things, which is the types of the funds and the equity sectors. This is more important because, you can see this portfolio is highly allocated to pharmaceuticals rather than banking, healthcare, and IT and finance. Now you might know that pharmaceuticals might have been a good choice in 2020, but in this current scenario, pharmaceuticals might not be performing as per needed. So now you might once you assess that information, you will be able to give your client a feedback that you are highly into pharmaceuticals. We might need to decrease the exposure into pharmaceuticals, in a fairly similar manner. So that's how you can assess the information and re-engineer the portfolio, or you can say restructure the portfolio. So for restructuring, it is very fairly simple. All you have to do is come into edit and save and restructure it, or add in another fund. We have given a totally research tab in fund section here. So, all you have to do is, once you have the list of the good funds, all you have to do is add in those particular funds. So as in an example, I would like to remove some pharma exposure. So what I can do is I can just keep it 10 as an example, and you can just rescale it to 100 as of now, and I can run it. Now, instead of creating it, I'm running it. Once I create this, the client one will be created. But if I change the exposure, if I run it once, and let's say Nippon India Power is 17% right now, and I would like to, reduce some exposure in power, what I have to do is, you don't have to save it again and again. All you have to do is, let's say, you have done, your analysis, and you think that, 17% is not appropriate. You should have at least like 12%, and maybe allocate 5% more into mid cap as an example. Let's rescale it. So once you rescale it, if you click on run, it will not save the portfolio. It will basically show the results of the asset allocation you have made. So let's say this asset allocation might not be the true allocation, might not be the most helpful allocation, and might not solve the problem of your client. If you run it, then you can gauge the performance as well. Now, once you have changed the asset allocation, you can easily gauge the performance. You can see how, how it is performing against the benchmark. You can see all the cumulative returns and annual volatility. You can see the Sharpe ratio here given here. And the most important thing is a value at risk, which we had, a session before, that how, what is the probability of this particular portfolio in having this particular loss. So you can, even choose in, let's say 99%. So now 1% is a probability in a confidence interval that you can have a drawdown of negative 39.57. So in this way, you can easily assess the portfolio, and you can see that, our annual return over benchmark is not that much of a key. It is just 0.79. So now how am I gonna, allocate better to actually give my client a better, value for my as an advisory? So what you can do here is you can improve the portfolio. Now here, instead of doing lots of permutation combination, it might take, hours for me to find what are the best asset allocation in this particular portfolio. But what I can do here is once I run it, once I save it, let's say, what I can do here is I can improve the portfolio. So all you have to do here is you have to click on this. Now, when you improve the portfolio, we have 6 sets of models. We are going to briefly talk about this models, not in depth, but I'm going to give you an information that how this models works out and how you can use this model to actually give you a better asset allocation. As an example, in this model, we are going to talk about 2 models. One is a ranking model, another is a value model. So based on this particular model, and what we are trying to achieve here is a better asset allocation for this entire portfolio. Now here in this, original allocations are given as such as follows. But in the base of ranking model, what we do here is it ranks, accordingly highly to that particular asset, which is contributing highly to the returns for the ranking returns. And, the similar thing works out for the minimum vol and rank sharp. So accordingly, you can see that if you would have taken such an asset allocation from this particular start date, you could have such a return, annualized return, and your volatility would be, in a fairly similar manner. So basically what you're doing is you're increasing your risk adjusted return. You're taking the similar risk, but you're giving a better return. And as an advisor, that is the key, because when you make a proper asset allocation, based on that, you can save the entire portfolio. So now what I can do here is I can save this portfolio and I can create it. Once I create it, there's another set of portfolio will be created in another tab, in an improved tab. And then I can actually compare the old portfolios with the new portfolios and tell my clients that, the proper asset allocation which I have made for you is actually better than the original which you had. And the only difference between the ranking model and the value model is that ranking model is a concentrated set of approach. As you can see, one set of mutual fund is getting a highly concentration, 34.14%. But if let's say if you want to go ahead with a value model, you can do all you can do here is that you can choose this return value, minimum vol value, or a sharp value. And here in this case, in this sharp value, you can see that we are considerably improving based on the original. And similarly, you can see the asset allocation is fairly balanced out. If you compare it with the rank sharp, the asset allocation is fairly balanced out. It is not 34.14%, the top ranked one. The top ranked one is actually 13.12%. So that's how this works out. There are more intricate details, and you can also amplify this model altogether, and you can rerun it. So amplification just makes the concentration higher. So instead of 13, it might become 16 if you amplify it by 2 or 3. So that's how the this model works out, and that's how you can asset allocate for any particular portfolio altogether. So let me just refresh my screen. Give me a moment. So that's how the model works out. And so apologies for the refreshing the screen. Just let's go ahead. So the first thing which we were talking about is actually the client onboarding. So that's what we have done. We have onboarded a client, and we have reviewed our client. And now why it is important? Because every single investor in our country, they look for returns. And that is truly right. Everyone looks for returns. How much returns are you going to provide me? But the importance here is what kind of risk are we taking for that particular return? Are we taking a proper asset allocation in consideration? Are we looking into a correlation analysis and looking into if it is very highly correlated portfolio, we might have market risk. And we do not want to have too much concentrated risk. So in correlation analysis, we can also look into those assets which are highly correlated and actually remove them. As an example, Franklin India Flexi Cap Fund and Nippon India Growth Fund is highly correlated. So the numberings are 0.90 or 0.95 is actually a high correlation. And if you want to have a low correlation, it is actually fairly like 0.65 to 75. And accordingly, you can see that Nippon India Pharma, as it is a different category altogether, is lowly correlating with other assets given here. So that's how it works out. You can review this portfolio based on the correlation. Correlation is a historical backtest of the assets and the behavior of their historical returns. And based on that, you get this, particular, numberings. And here you can assess the information, and you can see that, how highly correlated are we. As an example, if you see the correlation of Sun Pharmaceuticals, which is a stock, and Nippon India Pharma, you can see it is having a good correlation between Nippon India Pharma. As you can see, they are both in the similar set of industry. So this is how you can see the correlation even between a stock and a mutual fund. No matter if you have taken ICICI Bank, and if you have taken some blue chip fund, most of the blue chip fund might have ICICI Bank as their key stock in their portfolio. That's how correlation analysis is one of the way you can tell your client that are you diversified or not. If they are not diversified, you can tell your client straightforwardly that they are not diversified, and you can help them to diversify. And to yet you can do a lot of analysis, permutations and combinations, and bring in those diversification. So that's how this works out for the diversification as well. And one more thing is contribution analysis, because you need to recognize which particular security is actually contributing well in the portfolio. It doesn't matter if you're adding a mutual fund or a stock, it captures every single securities here. Even a gold, if you add a custom security from Edit, a customized security from here, if I add in an Apple stock from customized security, that will add as well. So it only takes into consideration the contribution to the return and the asset allocation, and you can click on any such security. Let's say Franklin India Flexi Cap. You can see this is the asset allocation, and this is how it is contributing to the portfolio, which is 8.40%. It is out of 100%. You can view this for every single security given here, and you can have your own start date and end date, and you can run the entire contribution analysis on this. So one simple thing here is that once you have done the assessment, you can share this PDF report with them. And this is a seamless PDF report because, maybe you want to instantly share this report to your client. So all you have to do here is you have to share this report, and you can tell your client, because once you share the report, you can talk about the intricate details that, how this portfolio is behaving, and, how the historical drawdowns it has shown from the last point of the time. I'm not showing the drawdowns because drawdowns we already had one session before, but I'm just going to give you a brief idea that drawdown analysis will give you an overview as to what were the losses in this particular portfolio and how many days it took to recover. So you can talk about, there were, let's say this loss. This loss is a fairly huge loss, and the recovery was, comparatively very huge. It's kind of like 2 to 3 years. If you 2 years, if you take into account 260 days as a 1 year, you can say that this is close to 2 years, more than 2 years. So this is how you can convey to your client that this is your assessment, and now you want to re-engineer this portfolio, restructure this entire portfolio. And you can even share the link with the client. We can talk about the share link later and with the PowerPoint as well. One thing for sure here is that once you have re-engineered the portfolio, you can compare the two portfolios. Now, comparisons helps you to assess your own asset allocation, because you might think that, okay, I've made some asset allocation and I would like to see if I'm better than that particular older portfolio. What you can do here is you can fairly make your own model portfolio. I'm just going to add in a model portfolio here. Let's say this one. Now, this is a portfolio which you have, made with an equal allocation. And with an optimized version, which I've shown you before, with portfolio improve, you can add in your own improved version. Now, it might be that you have made your own asset allocation into this particular securities, and you can see here that annual return difference is 2.44. Now, this is the one that you can say that you're creating an advisor alpha. Basically, if there is another client, let's say we add in a client, any client, I'm just going to add in another client. And if I compare it with this particular portfolio, you can see that you're creating an alpha, which is, more than 4.06%. Now, this is the value you are providing, and not just with the returns, it is also with the risk, because your portfolio, this model portfolio, is taking similar risk and giving you more returns. It's not taking that much of a risk because Sharpe ratio is also increased. So Sharpe ratio gives you risk adjusted return. In this way, you can see that, this particular portfolio, Mr. Rajesh, the client is 0.70 as a Sharpe ratio, and your portfolio is actually 1. And these are all the comparisons. There are lots of comparisons in the portfolio comparisons, like asset allocation, which we had a conversation about, that this particular asset allocation, how better allocated are we? As you can see, our allocation is, fairly better than this one. And you can also see the exposure composition here, because here our top equity is ICICI Bank compared to Sun Pharma. And then you can, see the comparisons between rolling analysis and drawdowns. Drawdowns is a risk parameter. And this is how this works out. When you have re-engineered the portfolio, this helps you in making those statements that the portfolio you have made for that particular client is actually superior than the previous one. And that is how this works out. And fairly we have talked about how we can onboard the client and how we can assess the client's portfolio and also re-engineer them. And I would like to talk about the client section here. So why client section matters? Because let's say we have an RTA connection. So we have given a facility for all the engine users to have RTA connection. And here, all your, if you have an ARN, your ARN gets onboarded here. So let's say I have an ARN as an advisor, and I'm looking into this entire, my AUM, and I have an AUM of 34 crores. Now I want to know that which of my client is holding DSP midcap fund. Now it is very important because I want to look that, okay, as an example, DSP midcap is, one of the, I want to rebalance DSP midcap altogether. I have searched them in my fund list. I have made comparisons, and now I am looking here and I want to know that, how many of my clients are holding DSP midcap. All I can do here is I just type in DSP midcap, and you can see accordingly 47 of my clients are holding DSP midcap. So now I can recognize those clients altogether, and fairly I can contact all of them and I can tell them that we should rebalance this, because I don't think so DSP midcap is gonna, it's according to my outlook. I can say that let's go for Kotak emerging equity, or let's go for some other midcap, but not DSP as of now. So this you can easily, fairly recognize every single clients of yours. One more important thing here is, let's say we have given a holding analysis tab here, and in debt holdings we have given one a very powerful function. Now why this is very helpful, because when you research into debt securities, you might want to know that which debt security is actually has defaulted, which debt papers has defaulted, and how many of the funds are actually holding that particular debt security. So if I search this debt security here, you can see that there are some debt securities which have defaulted, Reliance Capital and Reliance Home. And if I see that these are the funds which are actually holding that particular debt security, you might have a few years ago you might have given this particular debt this particular funds to your client. So for that, it is very easy to recognize that these are the papers which have defaulted, and you have recognized these are the funds. So now what you can do here is, you can go to your client section and you can search those particular funds. You might have 5 to 10 clients which are holding that particular fund. Now, this is important because when you tell your client that you're actively looking into their portfolio weekly or a monthly basis so that their portfolio might not suffer. And that is how you can, create a proper retention of your client, because that is how this matters. And one more thing here is that let's say you have a family with you. Why this is important? Because let's say you have Sharma family. Now all the Sharmas in one place, you load the multiple clients and you can run analytics on them. And this is very important because once you run analytics, you can just type in Sharma and now you can create an entire analytics based on that entire family. You run analytics on them. And here you can see the entire asset allocation, performance, contribution, and stats for this entire family. Now, why this is important? Because when you see the asset allocation of this entire family, you can see that they are highly into these three stocks, which are ICICI Bank, Infosys, HDFC. And you can tell that family that you as a family are actually, in the top 5 exposure. These are the stocks you should look for. Whenever you see the news, these are the stocks you should look for, because when you see the concentration, 21% of the concentration comes from this particular stocks. And that is how this matters. And, you can also recognize where these stocks are coming from, because there are lots of funds which are actually giving that exposure. And as an entire family, they have 2.58% of the foreign exposure, which are coming from some funds. So you can just look into this. Very, very important. You can view even debt exposure here. The entire family, you can review this debt exposure, and you can see that these are the portfolio credit ratings. These are the average portfolio YTM and average maturity and duration. And you can even download the entire debt exposure for your clients. Now, this is very important because when you have done all the assessment for your existing client, you can also improve the portfolio. One thing for sure, which I have shown you before. But one thing here is you can share this link. Now, this link is, so important because once you click on copy, and once I just, paste it somewhere, I'm just going to paste it here. This link is active for 7 days and your client can actually view the analytics altogether. You can see this is the analytics of your client. And similarly, this analytics, the same analytics which you are viewing into the NGEN Markets portal, your client can see that. And that will be written as shared with your name and your company's name. So basically, the client can actually change the benchmark, and all the dynamic analytics are given here, position list, and they can also get the price series and all. So this is more of a statistical thing, but this is very important because when you want to make a retention, your services as an advisor, as a value provider, is that you're also giving a high-end analytics as a link to your clients. And you can share them accordingly on mails or any other medium. This is very much possible. And one more thing here is a PowerPoint report. Now, PowerPoint report is very important here is because this is a customizable report. And now what do I mean by customizable here is that as PowerPoint is a customizable function, here you can see that the amount invested by the entire family, 1.68 crore is automatically updated. Whereas when you go into the portfolio section, you have to manually update the amount here. But when you have your own, setup in RTA, you can get your automated, AUM given here. So basically what you can do here is you can create the PPT. Once you create the PPT, that gets downloaded, and then you can view the entire asset allocation based on lakhs and crores. Now, why this is important? Because in India, we do not understand other currency formats such as millions and billions. Even as a person, I will never understand millions and billions and lakhs. I can just understand lakhs and crores because this is important in the currency format of rupees. I'm just loading this entire set of PowerPoint. I hope PowerPoint is visible to everyone. If it is not, please let me know. So in PowerPoint, as you can see, this is the Sharma family. And when you load in the PowerPoint, you can see that 56 lakhs of their amount is with ICICI Prudential Value Discovery. Now, this is a very insightful information because when you tell them that your most of your 70 lakhs of your portfolio is with this 2 AMCs altogether. And you can also, tell them that, 9 lakh of their rupees is with ICICI, and then Infosys and HDFC. That accounts for a top 21% exposure. And then you can, have conversations about the, equity allocation, the top how much exposures there are, and there are lots of performances. So we had a fairly enough webinar regarding the PPT before with Engine, and this is how this works out, because having your reports in lakhs and crores or in thousands gives you a lot of flexibility as an advisor, that your clients will actually relate it. It is more relatable. That is the reason, having a PowerPoint report is very, very important. And you can save this even in a PDF format. And that is very, very important as well. So these are the things. One important thing here is that you can compare funds. And now what I mean by compare fund is, let's say we load in some client, and I'm just going to remove this and I just add in some client. Let's say this one. Now, if I want to see the positional overlap of this particular portfolio, we have given an option here to click on the one set of, compare button, and you can compare the entire portfolio into the fund section. Now, easily all your, all your holdings in the fund section, all your holdings in the portfolio gets added into the compare button. So that is how this works out. And, you can actually see the positional overlap here. So positional overlap between the entire, portfolio is given here. So as you can see, with Tata Equity and Aditya Birla Sun Life Equity, we have 34% of overlap. And which are the stocks which are overlapping? You can click on this. So this is how the customer retention is possible. And one more thing here is that we have given flexibility to actually copy this portfolio into the portfolio section. Now we are into the client section here. So to copy this portfolio into the portfolio section, you might want to change some allocation here. So in the client section, you might not, but here, if you copy this, it gets copied. It gets copied. Let's say we add another one, Shekhar Sharma. So if I click on this, okay, let me add another one. Okay, let's this one. So if I click on this, they get copied into this portfolio section. So that's how this works out. Once they are copied, as you can see, please check, it is there in the portfolio section. All you have to do here is you come into the portfolio section, you click on this collapse all, and here are the folders which I have created. Now, this is also very important, because when you have folders with you, you can also create more folders. We have given an option to create more folders. I'm going to show you in a while, but you can see from clients is where all those portfolios are added. So you can see all those clients, this Avinash Chawla, you can run this portfolio. You can make some changes, you can re-engineer the portfolio and then, send it to your client via a share link or a PDF report or a PowerPoint report. So this is how, this works out. And similarly, in this manner, if you want to make a folder out of it, we have given an option when you add in a portfolio, let's say we add in a model portfolio here. So once you add in a portfolio, we have given this in folder. You click on this and you will have, multiple folders here. You can click on new folder and you can create a new folder altogether. Once you create a new folder, let's say I'm creating a model portfolio. So this is this folder, which I'm gonna plan out all my different sets of folders, different sets of portfolios, such as moderately high risk or risky portfolios or conservative portfolios. And I create it. Once I create it, I will have a model portfolio as a folder given here. So this is how, this entire session is all about. And, this is very useful because once you have created multiple folders, you can have those folders, this is a repository, kind of like a Windows system where you can, access all those portfolios in different folders. So you don't have to place all your clients in active section, because there are many advisors I have actually observed are only using active section and from clients and improve section. You can create more folders. Maybe you can create 10 folders more. And after that, you can segregate those different sets of folders and different sets of portfolios in those different folders. So this is the entire thing about this. I have finished this entire session. We can start with our Q&A session. So everybody, if you have a question, please, question us. We will address them either via chat or verbally. No matter, it is not a problem for us.
Hi, sir. Am I audible?
Yes, you are audible.
Sir, actually, I have a doubt that when comparing two funds, like, can we just have a demo of when we are comparing two funds? Like, can you add two funds and any two funds?
Okay. So,
Any
okay.
and
So yeah.
and when we click on compare funds, like the yes, there's an option that comes on the top, compare funds.
Oh, this is a tab, sir. So
No,
in this tab, this compare section is onboarded. So you can add in the multiple funds you want to add, not just two funds, and then you can actually compare directly from here. So let's say you want to
so
compare.
actually, what my point was that what I wanted to compare is basically when we compare two funds, it tells about the how like the 60% of the like suppose 50% concentration, they have the same shares. Like,
Right.
yes, this position overlap. So so I just wanted to know what are the other 66% which they don't hold. Like this is the 44% which comes at that these are common, right?
Hmm.
So I wanted to know the other 56% which is not there. So so can we just add on this thing also in this?
Yeah. Yeah, hi, this is Arunab. Yeah, thanks for pointing this out. So this is something that I believe someone else had also mentioned. So this is on our development list. So we will be releasing something like this soon. We definitely have the data. So let's just go to overlap once more and just confirm what it is that we'll be doing. So when you click on it, obviously right now you can see the common positions. But
Not the uncommon
yeah,
one.
yeah, not the uncommon. So
I
we
wanted
will
the
give you,
uncommon.
yeah, this is forthcoming. So if you just wait just a few more weeks, where we have quite a few releases coming in. So one of them will definitely have this.
Okay, and sir, one more thing
Yeah.
that I wanted that when there's a return column, right? 1 day return, 2 day return. Oh, sorry, 1 week,
Yeah. Yeah.
1 month return. So I just last time also pointed out that can I have a five? Can we have a 5 day return also?
Yes.
Like
Yes.
from
Yes.
Friday to
Yeah.
Friday.
Definitely. I mean, I can see it. It's on the list. So this one will come definitely much quicker, probably within the next 1 to 2 weeks. So this is definitely on there. Some other things, some other changes were made to this compare section where you can show height columns now.
Yes, the show height column,
Yeah.
the top left, right.
Yeah. So the 1 week I think got left behind. So that will definitely come in the next week.
Yes. So please make a note of these things that.
Yeah, we've got it. We've got it for sure.
Thank you. I'm done.
Hi, this is Nikhil. Can I go ahead?
Yeah, please go ahead.
Yeah, okay. So when I work with clients and who are with us for a reasonably long period of time, we do periodic changes to their portfolios. Now, is there a way we can show that, okay, if this is because we made this change to this portfolio, this is the change in the overall results that we are getting. If we had not made the change, this would have been your return, or the way the portfolio would have developed. So how can one build these scenarios through the client portfolios?
So one way to do this is, let's just go take any portfolio. Okay, let's just take this one, Avinash Chawla, right? So just go to edit, and then let's say, make the 23.0713 and make something the next one 27. So
or you removed a fund and added a new fund in that case.
Okay, fine. So just make a couple of changes, whatever. Just add something and add some new fund or something like that.
Fund. You're in the stock.
Yeah.
Okay, so there's a scale, etc. Now call it, whatever. Call it. Just call it something.
And put a date of the change in the portfolio, kind of whatever.
Yeah, fine. So just put today's date, 22nd April or something. And then create.
Mm-hmm.
Maybe in the same folder. And then, the closest we can get is it will show you, when you go to compare section and you basically compare these two portfolios, right?
The old and the new, right?
Yes, the old and the new. So let's just quickly do that, Umer. So here it is important to realize one thing is that this is showing you right from the beginning. So what this will not show you is the same portfolio where one particular fund was, let's say, added or removed on a particular historical date. If that's what you're looking for, then this is not exactly that. However, it will pretty closely represent, because what we are saying is this portfolio minus versus that portfolio with a small change actually represents a reasonable difference. So here you can see, obviously, they're quite close to each other because the differences in here are not that big. We've added one fund and I think reduced one position or something like that. So the difference is not that much, but it's still, something that you can point out. I mean, I can think of one example that one of our clients did, I believe is an advisor, who basically took a client's portfolio, added one foreign fund, which is a NASDAQ fund or something, for about 20%, rescaled it, and just showed the diversification benefit of adding foreign equities to an Indian mutual fund portfolio. Right. So that was quite a nice point, and it came out quite nicely. So you can easily do this like we just did, and then you can create a PDF if you want, or obviously just do it live in front of the client.
Yeah, so typically the way I would look at it, let's say I am doing a change today, and then so there are now from this date there are two portfolios, and then I do that review after a year. This is, if we had continued with that portfolio, this would have been the case. And after a year, now the new portfolio is looking like this. What are the numbers we visited?
So where there's one additional change you can do, where if you go back to the compare screen, in fact, this is specifically because of this that we added this. There's a custom start date on the top here. Right. So if you don't want to show the entire picture, you just want to show the last 1 year or something, based on whatever exactly your date was, then this will actually show
the change, the impact of the change.
Exactly. There it is now. So that's the impact of left versus right from 22nd April, 1st April 2021.
Okay, great. Thanks. Yeah, this helps.
No problem. There is one more question on the chat. They're asking, what does it mean from clients? Sure. So just go left, Umer, so we can show that folder. So, sir, what happens here is every time you click on a client on the client section and click on the copy button, it comes to this portfolio section. So on the left, Umer, just let's go on the left and keep this this menu open. So you can see there is a client section and there is a portfolio section below it. So here, Umer, let's go to the client section once. Yeah, so here let's say you have RTA connection and it's configured, and there's one of your client's data is here. If you want to, let's say, put these together, put this together with another portfolio and do comparisons, or you want to edit this portfolio and make some changes to it, you can click this button that Umer is showing you, which copies this portfolio as it is and takes it to the next section, which is a portfolio section. When it takes it, it just makes it easy for you to find by putting it into a folder called from clients. That's it. And here, by the way, before you run it, Umer, you can show there is a move to option here when you click the down arrow. Yeah. Let's just go there. So that one more time, cancel that. Yeah. So here, move to means if you don't want to keep it in that folder that we put in by default, you can change the folder. So this from clients is just the name of the folder where it lands up when you do the copy.
So there is a direct message from Mr. Pramod.
Yeah.
His message is, in one of the previous session, he had a feedback on making improved portfolio with cap on asset category.
Yes. So in terms of changing our improved functionality with caps on kind of asset allocation like equity, debt, or even further like let's say categories. So we have taken that on board. So that will that is a pretty big job. So it would kind of be like we have to optimize the sectors of the asset classes separately and then put them together in a portfolio. This is something you will have to be a bit patient with us while we release quite a lot of other features. We have about almost 50 open items, which we are going through right now. But we will definitely get to it as soon as we can, sir.
I don't know why Nikhil here again. There's one problem that I've been facing of late. Can you just go to the funds tab?
Yeah.
Okay. And when you go to category averages, and let's say you select any category, ultra short duration, if you just click on it. No, just, yeah. And now when you click on transfer to compare, many a times what is happening is only the fund names get transferred to compare and the data is not moving, and it's happening recurringly.
Okay, so we will check out why this is happening, but I can immediately tell you the reason is we've seen for some reason this is happening to a few clients. We don't know why, we'll find out, but your columns are automatically getting hidden. That's all that is happening.
No, I can see the columns, but the data is not getting populated there.
So, okay.
Column heads are visible, but only the fund names are seen, and then there's the whatever you see in that green, it's not visible there.
Achha, it's not populated.
Yeah, it's not populated, correct.
Is this happening in a kind of repeatable manner for you?
Yeah, it is. Of late, it's happening pretty regularly.
So we will just, if someone can make a note, we'll just, if you have 5 or 10 minutes, we'll just AnyDesk to your PC and check out why this is happening, because generally
there's no set pattern to it. Sometimes it opens up, sometimes it doesn't. So I don't know. We can do that. We can check that.
We can try and see if there's some issue, but usually it should not. I mean, if it's happening for a lot of funds, maybe give it a few extra seconds, but the green column should definitely fill in pretty much.
So that's completely blank. I can see the MTD, YTD, what are the column heads are visible, but the data below that is not.
Okay, we will try and get an AnyDesk done to see what's going on there.
Sure. Thank you.
Am I audible, sir?
Yeah, please.
Yeah, I didn't know.
Can you explain how to create a model portfolio, sir?
Sorry, I couldn't hear you. Please go ahead again.
How to create model portfolios, sir?
Sure. So, I mean, this is, of course, up to you in a lot of ways. I mean, in terms of creating model portfolios, of course, you should have some kind of idea of how many you want to create. You could have, let's say, like a simple example, you could create 3 model portfolios. One which is, heavily or not heavily, or at least quite a lot focused into equities. Some which is a bit balanced, and the other ones are more debt focused. Now, when you do that, then for each kind of model portfolio, we would suggest that you go through the entire universe of equity funds and try to find the best ones according to your understanding of the market and what your clients want, and pick the right funds. So, this is a pretty, general question to answer. I guess the main thing I would say is to, look through step by step. So if you want to find out a set of good equity funds, you should go through the categories that are available. I mean, that's where I would start. If you just go to category averages, from a layman's perspective, maybe what I could do is just uncheck everything here, and just look at the equity categories and maybe do some sorting here. Try to understand what kind of category of equity funds have been doing well. Not just short term, maybe slightly longer term as well. You have returns on the right side going 3 years and further down, 7, 10, 15-year kind of returns. So, after that, I would probably decide on a few categories that I think must be in my equity bucket. Once I do that, then I will have to do a little bit of work, which will take time, where I would go through each category one by one and try to pick the best funds out of those categories, and hopefully end up with, let's say, 8 or 10 funds across many different categories, which I would, let's say, call my best equity funds. Using those, I could maybe create one model portfolio, which I can then analyze further. And to create that, obviously, you have to keep going through each category and going through the funds that are available there. And once you have a small enough list that you're happy with all the funds, as Mayor was trying to show you there, you click on the create button, it goes to the portfolio section. That will be sent to the portfolio section with equal weightages into each of, let's say, the 10 funds that you've created. Then you can try out our optimizer. It might give you a better allocation, or you could use your own sense and understanding of the market to allocate according to your own views. And that would be the beginning of your model portfolio. Of course, it will take a little bit more time to maybe make final changes to it. But I mean, that would be a very, very quick example of how you could create a model portfolio.
So are there any other questions?
This is Padmanabhan from Chennai.
Yeah, hi, sir.
Yeah, see, is there any way can we check 52-week low, 52-week high NAV?
52-week.
See, because that is very important. Some of the whether the particular fund touches the highest NAV or still it's down. See, we can always go and check that particular fund separately, but I want to see some features 52-week low, 52-week high kind of this thing.
So when you say low high, you mean like you want to see the NAV?
Yeah, no. See, say for example, one particular fund NAV is, let us say, 15 rupee today.
Yeah.
So the fund it has reached sometime back 16 rupee 20 paise.
Yeah.
So I want to understand whenever it reaches 16.2, it should be 52-week high, something like that.
Okay. So obviously this you will see only for a single fund, right? Would there be a point in seeing?
Say for example, let us assume all the small cap funds or all the suppose small cap funds. Let us say there are some 30 small cap funds are there. So out of 30 small cap funds, which are the small cap fund has reached 52-week high. So how many funds are still down from the earlier peak? Something like that. No, that we can understand which is recovering fast. Those input,
Right.
it's very important.
So, so earlier peak won't be possible because obviously the bottoms for all of them will be different. I mean, one thing is there on the fund section. In the fund section, when you look at compare or even screener, when you look at the 1 year number here, that is the 1 year number as of today.
Yes. Yes.
Right. Even for screener also. Yeah. So you don't even have to restrict yourself to the compare section. Here you can just pick a category and just check the 1 year return, or 6 month or 3 month or whatever. But whether it's right now at the 1 year high or not, this I don't think we calculate that separately, but yeah. So because the 1 week, 1 year high could have happened 3 months ago, and you would not be able to tell from here. But here this will definitely tell you in the last 1 year. Who's up the most. We can add more time periods here, but again, they will be consistent across the fund. Now, if you're looking at a single fund, then of course we can easily show, in this analytics page, we can easily show 52-week high low. That would make sense because the NAV is also visible there.
Okay. See, that is one thing. And can you go to client section?
Yeah.
See the client section, I could see manual data, fund export, RTA connection, Finexa.
Yeah.
So Finexa and fund expert, these two are the mutual fund reporting software provided.
Yeah.
So they can integrate it with NGEN. So what is RTA connection and what is manual data?
Yes, sir. So first we'll go through manual data. That's the simplest, easiest one. So the manual data, this is there for everyone. And even if it's empty for you, you can just very simply create a client and client's portfolio. So just say, let's just do something quickly. And then add client. Okay, it must have added a PAN number changed because somebody must have added a PAN. Okay, so here now we can add a couple of funds. So this is completely manual, right? So here you
Okay, fine.
first the thing, so you add the unit or the value, whichever one you can put, and you keep adding. You can add a stock here, and once you do, so if you want to manually manage your data, you can put any name you want, PAN number, doesn't matter. This is your data.
Okay.
And once you click done,
Okay.
this will be added. So on the left hand side, you can see all the data that in our demo logins we have added. So this is all just mostly rubbish basically. But basically they're just random names with random portfolios. And then once you do it, you can use it just like the Finexa or the Fund Expert section. You can run analytics, print reports, etc. And one useful thing is we have seen some clients do this who wanted to manually input their data. Just go to the dashboard on the top here. Here. So here, what Umesh showed you earlier. If you basically manually entered all your data, you can do all the searches saying which of my clients are holding this fund, that fund. Like on the top right, you can see top 5 mutual fund exposures. So here you can see HDFC top 100 is there. You can just click on that bar. Just click on any of these bars. Yeah, and on the left it will load. So these are the people. Mire Asset large cap is the one that everybody I put most people in, and these are the clients and how much. So this is the manual data section where everything is managed by you manually. If you don't delete it, it will be here forever. Now, if you come to the RTA connection section, here you cannot edit anything. All this data comes in directly from CAMS and Carvi. And what we do is
how frequently it gets updated?
Once a week, sir, because we are doing it manually on your behalf.
So, but see, whatever the software we are buying, say somewhere they are charging between some 6,000 to 1 lakh rupee. So every software we are buying, so whatever the mail we are receiving from the CAMS and Carvi as a mail back, that will be automatically forwarded to the respective mutual fund reporting software. From that, if there is a new client, the client will be added. If there is any further investment, purchase or redemption or switch, everything will get captured. And we are not doing anything. So that is on a day-to-day basis. But in your case, it's a weekly basis, right?
So what we are doing is, the thing is, we are not replicating what the back office systems are doing. So Fund Expert, Finexa, Red Vision, Investwell, Wealth Magic, IFA Planet, these guys, they are taking all your transactions, right? So they are calculating XIR of your positions, they're calculating capital gains reports, a lot of other back office functions they're doing. What we are doing is we are only capturing the latest holdings of all your clients. And every week when we get your data, we delete your old data, we put the new data in, right? So only holdings. Now we are looking into other methods where we can completely automate this process. And if that is, that is possible, then daily updates will happen and you don't have to wait till the weekend. Like for example, today evening, the update will begin from our side. But back office functions are not something that we are developing from our end. So we are just kind of integrating with other softwares to do this. So Fund Expert, I can tell you, for example, the integration has worked very well. Every day the data is updated. The people who have Fund Expert with us, we they don't have to worry because they come here and all the data is automatically updated. So that has been that link has been working very well. And RTA connection is obviously there for all the.
See two things. Say for example, for a mutual fund reporting software, not only this is the updation of clients and transaction is one part, and they are giving so many reports. So I don't want you to get into all those things. But what I wanted is whatever the client investment we are receiving on a day-to-day basis via mailback report, if that can be captured, and probably we can do much better. See, in fact, what I personally feel I'm using for the last almost 18 months NGEN. I'm very happy with NGEN. In fact, I'm not even using 1% of NGEN. NGEN is like an Excel. So it is a ocean. So many things are there. So if the client investment also in place. No, probably I feel I could have done better. That is my only request.
Yes, sir. Yes, sir. So we have kind of tried to solve that problem through Fund Expert, but we are also looking into other ways of speeding this up, because right now it's once a week. If we do go to once every day, then you can then rest assured that every time you click on a client, the data is always up to date.
I don't have Nikhil here again.
Yes.
This is one condition. There's one issue that I'm facing now on the RTA side. We have two ARNs that we have, and obviously the client reporting software adds both of them. But here I am not able to get in the data for all the clients through the RTA connection.
That's right. So yeah, ideally the ideal solution at this point for you would be to come through Fund Expert, because if you do, everything will come. Now, what back office
obviously at an additional cost to me, so I have to also be cognizant of that.
Yeah, I mean, we've already got some discounts there, and we can talk more about how to kind of alleviate that even further. I'm sure that Anurup is here, so we can talk about that. But I mean, that I know is a current solution that can happen immediately. I think the cost has become very, very low now. But again, Anirudh can get in touch with you about that. But right now, in terms of integrating data directly, that's, I mean, can I just ask what back office software are you using right now?
Red Vision Wealth Elite.
Red Vision. So yeah, I mean, we have been saying this many times. I think I'm repeating myself again, but if Red Vision is willing, we are very happy to integrate with them in the same way.
I have checked with them; they are not willing.
That's not willing. So, so yeah, I mean, that's why we continue to focus on this RTA connection side, where we can maybe update this data daily.
No, that's the request. So on the request is RTA connection. Can you get two ARNs to be uploaded together?
I think, see, technically that is possible. It's just that, we have to schedule the work and get to it. It's not a hard job. It's just it's a lot of work, but it's not hard.
Yeah, because what happens is we have some assets lying in one ARN and some assets for the same client in another ARN. So therefore, looking at it, because my client software gives me a consolidated data, but here I am not able to, because of the RTA connection being done only on one ARN, I am not able to show everything to the client from that side.
Understood. We are going through some discussions right now about because we currently are faced with many options. I mean, one option is to provide back office licenses to people. The other option is to kind of do it ourselves. So we are trying our best to basically come up with a solution. But we understand the problem is simple, that you want your client data updated here so you can continue with your work. We are hopefully in the next coming 1 to 2 months we will hopefully come up with a more robust solution.
Thank you.
Yeah. Good evening, Gagan Gupta this side.
Hi.
So when you go to the fund section, and when you compare, and sometimes when I go to this, risk versus return and all, so when you try to change the year, actually, I'm not able to do it, sir.
Okay, so that would happen. That would only happen if you were going to a year which was before the minimum common start date. So that means that if you had, let's say, 4 funds and one of those funds was only 1 year old, then what would happen is it will not let you pick a start date for analysis that is before that point, because otherwise the comparison will become unfair. So here, for example, all the funds are quite old, but the newest fund is 11 years old. So let's go to risk versus return. So this should not let you go below this year. So it will not let you go past. If I want to do 2005, I cannot do it. I can, if I want to really do it, I have to remove that fund first. So the reason I think that you are seeing that happening, that you could not pick a year, is probably because there was one fund in your list which was maybe quite new.
Okay. Yeah. Okay. Thank you.
Is there any other questions?
for a given portfolio, where do we see that a Sharpe ratio?
Sure. So it's right on the front page. We'll just show you. Yes.
Oh, here in the performance. Okay. All right. Yeah. Thank you. I think I have seen, but somehow I missed noting that. Okay.
Yeah. So here and yeah. So for any portfolio, you can always see it.
All right.
And it'll be printed on all the reports also.
Right. Okay. All right. So yeah, I'm fine with that.
Thank you, sir. So if there are no other questions, may I just check and then we can close for today.
Surely. So thank you so much, everyone, for joining this session. As I can see, we had a better engagement than before. We will be trying to come up with more innovative topics to actually, help you in your, advisory and distribution business. And thank you so much again. And, have a nice day. We will meet again 4 o'clock Friday. Every single week we are going to have this session. So thank you so much.